That's it. Thank you so much, Leanne. Yes, we're talking about the tax season. It started on Friday, the 1st of July. We're helping you out with Eric Jordaan this morning to make sure that it's all smooth sailing when it comes to your tax returns. Eric, lovely back with you. Okay, so tax, we're talking about that. I mean, what ways? People are wondering, can they claim tax legally back from SARS? Because they don't want to make any kind of mistakes here.
Indeed, yeah. So it's always important that you must remember that the amount that you're going to claim is for the tax season ending on the 29th of February 2016. So it only relates to any expenses that you've actually incurred during that tax year. So that's the first point, is you must make sure that whatever you're claiming for applies to the correct tax year. Yeah. Then the other thing that's always important is that whatever deductions you do claim, that you have documentary proof for that. So for instance, a certificate that you would get from your pension fund or retirement annuity fund that you contribute to, you need to have those certificates. If you have interest that you would earning from a bank, you need to get the interest, the certificates that we spoke about. So always have the documentary proof.
Now, whether you are an employee working for a company or a freelancer, I mean, the responsibility for you to pay tax, it lies with you, essentially. I mean, that's where it starts, to make sure that you follow the right procedures as well. Now, I think one of the main fears that people have is that they are scared that they do something illegal. They want to stay on the right side of the law. So what advice would you give to viewers out there going into the tax season to make sure that everything is just set up right?
Yeah. So it's always important that whatever you do declare in your tax returns, always have the documentary proof, so that you must make sure that whatever you have there is backed up by evidence. So whether that is your certificates that we spoke about, whether it's your financial statements, always just have those ready so that you don't fall foul of any law.
Exactly. Have those copies with you to check them over and check them over again. Let's focus on freelancers. I mean, there's a lot of freelancers, especially in our industry as well. Is it the freelancer's responsibility to kind of figure out at the end of the day how much tax they need to be paying? How does that process work?
Yeah, so as we just mentioned, ultimately it's the taxpayer's responsibility to determine and pay over his tax. In the event of a freelancer, other than a normal salary earner where your employer deducts your tax on a monthly basis, you would be what you fall under a provisional taxpayer. And what that means is it's not an additional tax, it's merely just a way of collecting it. So you would have to estimate your potential earnings for the year, and then twice a year you would have to make a provisional tax payment towards SARS. Then obviously if you underestimate that slightly, you have a top-up, a third payment, to make sure that you don't fall foul and have to pay any type of interest on outstanding amounts of SARS. But ultimately you still need to determine your final tax liability by submitting your tax return, and that determines your final tax liability for the tax year.
Now, what happens if your employer actually fails to pay all of the tax that's required over to SARS? I mean, whose fault is that? I mean, because now you as an employee, it's going to reflect badly on you.
Yeah. So ultimately, yes, it does fall back on the employee. So you do have some duty to make sure that the correct amounts of tax are deducted. There are certain recourses that SARS would obviously have against your employer for not paying over the correct amount of tax. But yes, ultimately the individual taxpayer are the one who is responsible for that.
Now, like you've mentioned, the setup in terms of paying tax between a person that's employed full-time with a company as opposed to a freelancer is a little bit different. So back to freelancers for a second here. Somebody that works from home, what are some of the things that they can look at to pay tax on or maybe claim tax back from?
Yeah. So it's always important that, yes, as a freelancer, you have additional amounts that you potentially can deduct from tax. So always look at those expenses and what they call as the expenditure that you incur in the production of any income. In other words, your home office that you're using, part of that cost proportionate to the space that you're using at your house, you can deduct those costs. For instance, the interest that you pay on your bond is proportionate to that you can deduct. Things like your telephone costs you can deduct. And even entertainment allowances, people who need that to do their work, and we take out people for entertainment, those are also costs that you can deduct from your taxable income.
All right, and if you still don't understand it fully, you can just contact somebody like Eric. He will explain to you in perfect precision what you need to do when it comes to the tax season. But we're not done yet. Eric is going to be hanging around for a little while longer to answer some of your tax questions as well.